Dad, PayPal's earnings are next week. Everyone's talking. Should I buy before it jumps?
That's exactly the kind of question we hear a lot, son. But before deciding based on chatter, let's dig into what's really going on with PayPal, the business, the numbers, the context. Earnings might move the stock short term, but the fundamentals drive the long-term value.
All right, what's PayPal doing these days? I mostly use Venmo, though.
Good observation. PayPal is one of the major digital payments companies globally. It's active in about 200 markets, supports dozens of currencies, and controls brands like Venmo, Braintree, merchant processor, Xoom, international money transfers, and Honey, browser consumer deals. So when you or someone checks out online, sends money to a friend, or pays via app, PayPal might be the platform behind it. Their reach is significant.
Okay, but are they still growing, making money?
Yes, and yes, mostly. Let's look at recent figures. In fiscal year 2024, PayPal reported net revenues of $31.80 billion, up about 6.8% from $29.77 billion in 2023. For that same year, their total payment volume, TPV, that's the total dollar amount flowing through their platforms, reached $1.68 trillion, up about 10% from 2023. Net income, GAAP, in 2024 was about $4.15 billion, down slightly, about 2.3%, from $4.246 billion in 2023. In Q4 of 2024, revenues were approximately $8.4 billion, TPV about $437.8 billion, and GAAP EPS was around $1.11. Free cash flow for full year 2024 was about $6.8 billion. So yes, they're making money and growing volume, but the growth rate is modest compared to what investors hoped for in the past.
If the numbers are decent, why did the stock drop so much?
Because of expectations versus reality. Back in 2021, PayPal was trading very high, with investors counting on rapid growth. Its revenue growth had been strong, but as life normalized post-pandemic and competition ramped up, the growth slowed. For example, while revenue still rose about 6 to 7% in 2024, that's far less than the double-digit rates some earlier years posted. When a company trades like a growth engine and becomes a slower growth business, valuations often shrink.
What numbers should we watch when earnings come out?
Several metrics matter. Total payment volume. It shows how much money is flowing through PayPal's system. Growth here signals usage rising. Active accounts. How many users and merchants? PayPal mentioned about 434 million accounts in FY 2024. Take rate or transaction margin dollars. The amount PayPal earns per dollar processed. In FY 2024, transaction margin dollars were about $14.7 billion. Free cash flow. PayPal's about $6.8 billion in 2024 free cash flow is a strong base. Guidance. What management says for next quarter or year, sometimes more important than actual current results. If TPV is strong, take rate stabilizes or improves, and they give decent guidance, that could spark investor optimism.
Who's chasing PayPal? Are they losing ground?
Yes, the competition is fierce. Some of the key rivals. Apple Pay, dominant in mobile and in-store contactless payments. Stripe, huge in e-commerce, checkout, and merchant payments. Cash App, by Block, growing among younger users. PayPal still plays a big role in online payments, but to stay ahead, it needs to evolve. Improve Venmo, increase merchant services, raise take rate, cut costs, and innovate. Any weak spot here could hurt its moat.
So, what is PayPal's plan? How do they fight back?
They've laid out a few strategies. Cost control and margin improvement. In 2024, PayPal expanded its non-GAAP operating margin to 18.4%. Modernizing checkout and merchant experience, improving branded and unbranded checkout flows, reducing friction. Growing Venmo and peer-to-peer, emphasizing younger users and social payments. New initiatives like launching tap-to-pay on smartphones and expanding merchant services globally. Share repurchases, In 2024, they returned about $6 billion to shareholders and authorized a new $15 billion buyback program. If these strategies succeed, they can drive better growth and improve sentiment.
At today's price, is PayPal cheap or risky?
Good question. With the growth slowdown, the market values PayPal closer to a mature business rather than a rocket growth story. But that doesn't mean it can't be undervalued. If you're paying based on current earnings and cash flow, the $6.8 billion free cash flow is strong. If PayPal can raise growth modestly or stabilize margins, the valuation could improve. On the flip side, continued pressure on take rates or weak guidance could make the stock stay stagnant.
Earnings can cause volatility, but as a long-term play, yes, I think PayPal still has potential. Great brand, large user base, strong cash flow. The question is whether it can grow again meaningfully. If I were buying, I'd buy because I believe in the business 5 years from now, not just on the hype of next quarter. I'd probably wait until after the earnings to decide.
Got it. Earnings are just a snapshot, but fundamentals tell the story.
Exactly, son. Markets jump at new info, but value is built over time. PayPal's story isn't over, but it's entering a new phase. Growth is harder, competition is tougher, but strong execution can still make this interesting. So watch the earnings, but base your judgment on the business, not just the price.
Dad, I found something called PYPG. It says it's linked to PayPal and offers 2x leverage. What does that mean?
Good question. PYPG is the Leveraged Shares 2x Long PYPL Daily ETF, which seeks to provide twice, that's 200%, of the daily performance of PayPal stock, PYPL, before fees and expenses. So if PayPal goes up 1% in a day, PYPG would aim to go up about 2%. If PayPal falls 1%, PYPG would lose about 2%. That's the basic idea. These ETFs are designed to give greater return and are good for short-term hold.
So this is more like a trade than a long-term investment?
Exactly. It's designed for knowledgeable investors who understand leverage, monitor the position frequently, and possibly use it for short-term tactical exposure to PayPal stock moves. Holding it like a standard stock or ETF for years might lead to unexpected outcomes. If you found this breakdown helpful, hit that like button, subscribe, and tell us in the comments, do you think PayPal's next earnings will be the spark it needs, or is the real issue deeper?